Okay, so how to place the order in broker speak, because the brokers tend to, you have to use their speak, and I know it can be a bit um, uh, overwhelming, or you can be put off sometimes by the technical speak of how brokers speak, but this is how it goes. A Market Mum's capital protected income strategy, or collars. Now, don't go to them saying you want to put on Market Mum's capital protected income strategy, because they'll look at you dumb. You say you want to place a collar trade, and that's how, if you say that you want to place a collar, that is how they will be placed in one go as one trade. That is a must, has to be done. You've got to check with your broker as to how they place the collar trades. Some may do it a bit differently to others. Now, this neat little sheet that I've just brought up here is my collar strategy worksheet that I've put together. It's a fantastic little tool that I've put together that you just plug in all the information, mostly all this green information here, and what it does is tell you your return if exercised, your income, your total cost of the stock, and more importantly your monthly return, your maximum loss, and the percentage of your capital which is protected, which is pretty cool. This little part down here though is the most important part. This part here is your strategy buy price. This is the price limit that you give to your broker when you want to be doing this strategy. And each time you plug it in, it'll come up with the figure here for whichever stock you're doing, and it just gives you a guide as to what your limit should be. And you can see it when you adjust the different figures, how your monthly return adjusts and how this strategy buy price adjusts. So like I said, this worksheet will be available for you to download free off my website, off my blog, and I'm going to put together a tutorial on how to use this worksheet too, just to keep things keep things clear and everything. Okay, so now I'm going into some example trades, and this first one is on Santos. This was actually the first one I did, and I'm very proud of it because it worked really, really well. I'm very, very proud of it. So you can see the date that I placed the trade was the 3rd of the 11th. Santos, I bought the stock at $13.69, 2,000 shares. My put strike was $11. Put premium was 21 cents. My call strike was $13.50. So as you can see, it was in the money by a little bit. But as this is an income strategy and not a capital growth strategy, this is an ideal. This is the way I do it. And I'm not into capital growth, so to give up a little bit to get a nice return if I'm exercised of this kind of cash is pretty cool. So it's call premium, and all this green is what you plug in. And there's your monthly return. So that was a return of 7.74%. That was my first trade, and I was just busting. I thought that was the bee's knees. I was pretty happy about that, and it worked out really well. I was actually exercised on it and netted a nice $17.40. And here is that figure I was talking about, the strategy buy price. I bought the strategy at $12.63. Now when you do this, you might say you give your broker a limit. I think I gave them a limit of I might have been $12.65, but I was lucky enough to came back and got me on at $12.63. So whenever you plugged all the information in and it gives you the figure here, you always give it 1 or 2 cents, because sometimes you never actually get it on exactly what this says. You might be lucky, sometimes you can, but it's all, if it's worth doing, then a cent, 1 or 2 cents isn't going to make much of a difference. Okay, here's another example. I did it on the same day. I had a bit of momentum when I placed that first trade. It's on Lahir, and that was when Lahir was $1.98. Of course, now it's around nearly $3, which would have been nice to hang on to this stock, but that's the thing, I don't think about that. I get my cash and I'm happy. So I bought the stock at $1.98. I bought 12,000 of these shares because they were quite cheap at a put strike of $1.60. You can see it's 80% capital protected. Put premium shows you everything there. The total cost of the stock. Monthly return was over 6.5%, which was pretty handy. shows you my strategy buy price was $1.85, and the income for this was $1,560. But as I did the call strike at $2, I actually got a bit of capital growth in there, and I was exercised at $2 and netted a nice $1,800, which was pretty handy. So I was pretty happy with that one too. Okay, this one was a sneaky trade, a sneaky 2-week trade that I did in December. This is the only trade I did in December because I was sort of I was happy with my November trades, and I was pretty busy with Christmas and things like that. So I found this trade and I thought, oh, it's too good not to do. It was only 2 weeks to go. You see, it was on the 4th of the 12th. Stock price was $2.27. I bought 10,000 shares. I bought a put at $1.80, which was just under 80% capital protected. But you know, I thought for the return I was getting, this 5.73% return, it was too good not to do. So my strategy buy price was $2.14. Income, I was exercised on this trade, and I netted $1,100 for 2 weeks, which was fantastic. You know, it was unbelievable. So I was pretty happy about that. So okay, we'll go into some frequently asked questions now. I'm sure you'll have more questions than what I've put together on here, but I thought this would just be a little bit of a starter of your frequently asked questions, and then, you know, when this tutorial's finished, there'll be the comments box underneath my blog. You can post any questions under there for me, and I prefer you do it on there so other people can see the questions and my answers, and you know, they can get, you know, people can just find out what's going on from there. So I'd appreciate that. Anyway, I've put together some of these some frequently asked questions that might be on your mind. First one is, what stocks can I do this strategy on? Well, any stock that you can trade options on, and they're fairly liquid, is suitable for this strategy. I mean, there are a number of different stocks. I have, you'll find out from experience, you'll have favourites that you do them on because the premiums are better. Some are better than others and things like that. But that's just all experience. You'll get to know that. Do I need a special account to trade this strategy? What you will need is a margin loan facility set up, and you check with your broker as to how if they do it for a start and how they do it. I mean, you don't have to use a margin loan. However, the return on your investment is greater if you do, because you're virtually not using any of your own money to do it. So it's a lot more beneficial, I think. Now, what percentage of my capital do I insure? Which is a really good question. I generally aim to protect between 80 to 90% of my capital. The way it works is the less you protect, the bigger your return, but also the greater your risk. So you've just got to think about that. The more you insure, the more you protect, the less your return will be. Sometimes, not always, but sometimes. So sometimes you can get, on for 90% and get a 6% return, which is fantastic. And they're the ones you want to jump on if you can. So, and what percentage return do I aim for per month? Generally, I aim for at least a 5% return per month. Alright, and that's all worked out on that spreadsheet. Shows you what the percentage return is. I mean, of course, if there's there's a trade that might be 4.5% and it's a really good return cash wise, then I may do it. But I think for what you're doing, I generally aim for at least 5%. There are so many trades out there. You just got to be patient and wait for them. You don't want to be doing ones that you put a trade on that's only 3% and then you find out the next week a stock, you can, with a different stock, you can get a 6% return. So it's all about patience, and that's why I think having guidelines and having a spreadsheet where you can plug all your information in is important. So there we go. Thank you. Thank you for your attention. Thank you for your time, for your time in viewing this. I really, really hope that you got a lot of benefit out of this little tutorial. The beauty of this tutorial, the reason why I went quite quickly through everything, is that you can go back. You can rewind it, you can go back, you can watch it however many times you want, just to make it sink in a bit better. And of course I'm available for questions. If you want more information, go to my blog, marketmum.universalwealthcreation.com, and underneath there'll be a comments box where you can post some questions and comments, ask me some questions so I can post them on there and it'll benefit other people so they can see what they are. My books are available on my blog, and get yourself a copy and see how I do what I do. And I hope that you're as excited about this strategy as I am. So happy trading. Bye for now.